to make money in the stock market the easy way. All you have to do is follow my advice here. I've been trading for 3 years, and here is what I've learned when it comes with swing trading strategy. The three things that you must have if you're going to swing trade stock. And the most important thing, believe it or not, it's not the stop loss, not the take profit target, it's entry. Entry is the most important thing. If you look at this chart in front of you, you'll notice two things. Stocks go up and they go down. You want to avoid buying at the top, such as when this stock was at a high of 4795. You don't want to buy the top because you know what happens there? Selling pressure comes in, it pushes it down. Now it's at 160, 1.646. Huge surge in price. Huge sell off. You do not want to be caught in that. And how do you avoid this? You look at every chart on your watch list, and the first thing you want to do is go to the daily chart and you want to see where is the bottom. What defines a bottom? Think about that for a second. A stock that has bottomed out. How would you define that? I define that as an area where buyers always step up and buy the stock at that price. And in this case, if we grab our little rectangle tool, you'll notice, at least recently, this whole area here, I don't know about you guys, but this looks like where buyers always seem to step in. This has been happening since 2023. Since 2023, this has been happening. The stock comes down as low as 1.561, and it moves up about 50 cents, comes back down, moves another 50 to 70 cents, and it kind of just rinses and repeats. So how many touches down here? 1, 2, 3, 4. And then we had that huge surge in price and that huge dump to follow. And you'll notice, is it just me or are we right back inside that rectangle? Are we back inside it? I don't know about you guys, but we're getting close. And no one would blame you for adding shares here at around 1.75. And no one would blame you for adding even lower. So now, just like that, we've identified a stock that is going sideways, that has found a bottom where buyers step in and always buy the stock. That is very important. If you're going to be swing trading stock, you want to buy when everyone else buys in. And that happens to be down here at around 165. And so what you want to do is you want to buy around that level. You want to buy around 165, 175, somewhere around there. And you want to start accumulating. And then you want to set a stop loss. You'll notice the price came down as low as 1.548. So you want to set a stop loss at 1.45 or 1.49, 1.5. Now, when it comes to stop losses, it's going to depend entirely on volatility. But in this case, it's not very volatile. It kind of tends to be a slow mover. But for something like BBAI, you would want to buy it at 165, 175, even as low as 155. If you can get some shares there, set your stop loss at 1.49. And let me mark that for you guys. This is what you have to do with every stock. Where is the bottom? And then let's just say you set a nice loose stop loss at 1.45. So this means if it comes down here, you're going to take the loss and that's it. You move on. You don't cry about it. You just take the L and you move on. Because we know every single time it's come down here, the lowest it's come down to is 155. So if it starts going lower than previously, more than likely, we're probably going to head lower. We're going to head to $1. So it's very important to have that stop loss. You can't ignore that. Because without a stop loss, you don't have a strategy. You're just buying stock and hoping it goes up. And if it doesn't, you're just holding a bag and still hoping it comes up. And that's a mistake that I still do to this day on some stocks. And it's not until now that I'm like, okay, I think we need to start setting stop losses here. I think we need to start protecting ourselves. because I'm tired of holding bags. Because again, you can have a strategy, but is it really a strategy if you don't have a stop loss? You don't take the L when you should, because there's a lot of people here who decided to hold the bag up here at $4, and now they're down 50% plus. And that's a mistake. And like I said, it's a mistake that I've made many times, even recently. And I'm tired of it, and that's why I'm making this video. I'm like, do not make those same mistakes that I've made. Um, Now it's gonna be dependent on the stock. Like I said, if we talk about, let's look at let's switch over to another stock here. Let's switch over to Marathon Digital. Okay, so where's the bottom? Might be a little harder to identify, but if we grab our rectangle tool, you'll notice $15 seems to be a good price. You know, $15 to $14 here. You can tell just by looking here that it tends to be a little more of a volatile stock. It can jump around $1 within a day, within one candle, sometimes even $2. So that alone tells you that this one's a little more volatile, and you have to factor that into your square or rectangle. And here you go. This whole zone here that I'm drawing for you guys, there is your support. There is where buyers step in. They've stepped in once here, again here, and then it didn't even come down that low here. And then finally, we're down here at around $14 to $15. We're getting there. Again, very volatile. So it's very likely that we're going to see 14.15 on Monday. But you'll notice that this area, we broke out of it to create a new high. So this technically should be a strong area of support. This is where we expect to see buyers. And we would buy in as cheap as possible. We would look to buy in around $14.70 to $15. And then you would want to set your stop loss probably around $13.50, because again, we just recognize that this one is very volatile. So you gotta give it a little more breathing room. And we would set our stop loss there, and there you go. So that's really the most important thing. When to buy and setting the stop loss. Taking profit, that's last. If you can't even master identifying when to buy and where to set the stop loss, then you're lost already. Because when it doesn't work in your favor, you're going to be holding a bag. Now, for setting a target price to sell at, a sell target is what I like to call it. A sell target. Let's mark that here. So the first sell target, if you look at the price here, would be 17, and then here up here at around 19. That would be your sell target, 17 and 19. But again, it's going to be highly dependent on the stock you're trading. It's easy for me to point and say, oh yeah, just sell it right here. It's going to be entirely dependent on the stock and its volatility. But yeah, you would look to sell it around 17 to 19. So let's say you bought in at 14.50, you got it nice and cheap, and then it comes up 17. I mean, that's money. If it comes to 19, it's money. If it comes down to 13.50, you lose what? You bought at 14.50, right? So if it comes down to 13.50, you lose $1 per share. But if it goes to 17.50, let's say, then you just made $3 per share. So it's a one. Yeah, it's a nice risk reward ratio right there. You're risking $1 per share loss versus a potential $3 gain per share. And that's a whole nother video in and of itself, risk to reward. But that's how I like to do it. That's why I'm always looking for bottoms on stocks. Always, you want to be a cheapskate in the markets. You never want to buy when it's up here. And that's it for the video, guys. Hopefully this helps you out. That is literally how I see the market. But I have made the mistakes of not setting stop loss because I get cocky. I get confident. I'm like, I don't need a stop loss. I know what I'm doing. But sometimes these areas won't hold. And a good example of that, let me just show you an example of a stock that bottomed out seemingly and it never recovered. So if you zoom out on this chart, you will notice right away, like, it's kind of bottomed out down here. Oh, what happened? You guys see what happened? You guys see that? We would bottom out down here at around $1.10, and then it would go on a huge run to $2. Here it ran to almost $3. But you notice two things. A, we actually came down under $1, and buyers were nowhere to be found. Look at all these red candles, nothing but red candles. Buyers, they're nowhere to be found. There's so many people who ask me, is this a buy now that it's down here nice and cheap? But it's not, because A, it's below the rectangle that we identified as the area where buyers step in. The fact that buyers weren't able to even do anything to offset sellers, the fact that it's even below our identified area of support, our area where we expect buyers to step in big, the fact that it's below our rectangle, it's automatically, you do not want to touch it. And that's it for the video. Hopefully you took something away from this. That is it. See you guys in the next one. But again, it's highly dependent on the stock. Something like a penny stock, I'll probably touch that. I'll probably make another video on penny stocks because penny stocks are much more volatile. They can jump 20%, 30%, and just quickly drop that much as well. So that's